Welcome everyone to Maverick Currencies RBNZ meeting. Corey here with you. Nice to see all of you. So let's get to it. The RBNZ statement is expected to come out with a 50 basis point hike, which would actually make the third 50 basis point hike in a row. The last time we met for the RBNZ, it's never about just the number, right? That's somewhat priced in. The expectation for a 50 basis point hike is expected and priced in based on the last statement. And the last statement was important where they really came out hawkish. They moved up their expectations. They went from baseline of expecting to stop hiking rates when they got to 3.3, and they hiked that up. I'm going from memory, and it was either 3.8 or 3.9. I don't remember exactly, but they kind of moved up the expectation. So they're saying, look, as a central bank, we're not expected to stop hiking rates until 3.8. That was a hawkish message. The Kiwi rallied on that, of course. And so we know that this is somewhat priced in. It's already known to the markets. It should be somewhat priced in, but it's always the debate and the question mark of, well, okay, how much is it priced in? Is it fully priced in? Is there still going to be a hawkish message along with this? So if we look at some of the Kiwi pairs, here's a 4-hour chart, and you can see, if you're looking at Kiwi strength, it's actually doing okay. It's kind of got a big reversal higher against the yen. Most things have been selling off against the yen for a number of days along with the Kiwi, but it has reversed hard here. And so if you wanted to buy the Kiwi, I mean, it's not the worst chart to look at. We know the euro has been a disaster. So you could consider, I probably like this one even better. If you want to buy the Kiwi, go long the Kiwi, you probably just keep picking on the euro. We have done so against the US dollar, not against the Kiwi, but euro USD. We talked about when it was at 104 a couple of weeks ago, we talked about it going towards parity. Now, I did not think that it would hit parity within a couple of weeks. 400 pips in a couple of weeks is really a historic move. The euro is in free fall. The danger with the euro is that maybe that euro USD kind of touching one today, hitting parity today, maybe that's kind of a temporary low, and there is some potential for buying in the euro. But I would almost go the other route probably and say it's in such free fall. I think what's going to happen, let's go to the Euro USD chart just so you can see it. You can see that we came down and basically touched parity and bounced. My guess is that it's going to scare people with a spike through. So I would still lean towards being short euro. And on that spike, Euro USD is probably where you're taking your cues. On that spike lower, you just basically lock in your profits as it kind of surges below 1. If you're trading Euro Kiwi, I would still keep an eye on that pairing. Pound Kiwi. So out of the three, again, these are all kind of something that you could short against the Kiwi, buying the Kiwi as I see it. Out of the three, this one's my favorite. And so I think that this is the trade opportunity here. Now, again, the Kiwi doesn't have to rally because the 50 basis points is probably somewhat priced in, but I think it's still going to. I think they're still going to be on point with a pretty hawkish message and whatnot. So maybe we trade this one tonight. I think what I like most about it is just the clarity. It basically has this key level. You can see the number of touches. You can see how it's just bounced and bounced and bounced and bounced and used it as resistance and then spiked through and used it as support. It's just this key level that it keeps using. And right now we've got this bearish engulfing. If you get a little choppiness, I may short this for that next wave of selling. So pound Kiwi is my absolute favorite. Now, what if you wanted to play Kiwi short? Let's go to Aussie Kiwi here. Aussie Kiwi has somewhat stabilized more than the others. It's not really, my first idea, but you're in kind of this triangular pattern. You have a little bit of an uptrend line that it's recently bounced off of. So the idea would be that we maybe trade back up, and this is an ascending triangle. Maybe the Aussie's going to keep strengthening here. Not my first choice. If we wanted to short the Kiwi, obviously against the US dollar would be a candidate. US dollar has just been so strong. Here's Kiwi as a short against the USD, and that's, as far as technicals go, it's really the one chart that the Kiwi's trending lower against, with obviously trending lower against this currency on the 4-hour time frame. Against everything else, it's holding up relatively well. It looks like Kiwi's more of a long than a short. Kiwi against the Swiss franc, again, if you wanted to short the Kiwi here, it's kind of upward trending, so I don't know. I'm probably just a nothing on that. And then Kiwi versus the CAD. This would be my other choice along with USD as far as the short. And I actually prefer this one. Let me draw kind of what I'm seeing here in the Kiwi short. Inverse cup and handle idea, and that maybe we trade back down here and pierce that support. Out of all of the charts, as far as Kiwi short, I think I prefer it against the CAD on the short side, and I prefer going short pound Kiwi if we want to play the Kiwi to the upside. So those are the two charts that I'm personally going to toggle back and forth on. Now these are 4-hour time frames. If you come into a little shorter time, let's go into a 1 hour or something like that, well, now it's a little bit of a question as far as, do we hold at this downtrend line? And is this a symmetrical triangle that's going to break to the downside? That's what we would like to see. So Kiwi's got to roll over here if we're going to play it to the downside versus CAD. If we look at pound Kiwi on the 1 hour, again, this is still a short setup. It's still short pound, long Kiwi against that 194. So the 1 hour chart in the Kiwi versus the CAD, not quite so obvious, but those are my two candidates. We either go short pound Kiwi, which really gets us short that, and long Kiwi, right? Or we short Kiwi CAD, which would play the Kiwi the other way and play the CAD to the upside. Those are my two preferred as I've been looking at the charts and looking at the setups. I still like CAD. Now, oil was down 8% today. I still like CAD versus Kiwi, and I kind of like it better today because I feel like oil had that big flush out. I said something in the currency midweeks over the last couple of weeks that was, like I said at the time, it's probably controversial, but I expected that basically inflation has peaked and that oil will come off. It's like the last holdout was oil and food prices, but the other things trading lower, they were probably the last holdouts, but we're going to kind of succumb to the pressure. But the good thing is the things that hold up well initially, it's kind of like the junk falls first and then the good things get hit as well. That's where I'd put oil. Oil's getting hit, but there's still, I just don't see oil going down to like 60 a barrel or something like that. It could go a little lower, but not too much. I think it's kind of flushed out to the downside, which I think oil's going to stay pretty sticky to 100 and probably later this year even higher than that. I think, Europe's got an energy crisis and it's just not going to go down that much in my opinion. Targets for pound Kiwi, we're just going to trade it around this event. So it's not going to be much. I'm not really going to try to risk much. And I'm not probably going to have that much reward. You know, looking at this, what I want in pound Kiwi is to have my stop just up above this pivot. And maybe we get short in here, but you can see Kiwi's rallying. The news, you know, I don't know if the news is hit. It would be a little bit early. Sometimes they do release a little early. Maybe this is just selling off into it. Let's go to the 15-minute, but you can kind of see this. When the news hits, there should be a spike. So let's see if there's kind of a big jump. You'll probably see it. Let's go to Kiwi CAD. And just see if we can. Both of these are shorts the way we're going to play them. Either we're going to short this one or we're going to short this one back down. But right now, Kiwi's kind of falling off of the highs. So it's hit that high and it's kind of backing off. You can see, I mean, the knee-jerk reaction is bearish in the Kiwi. So this is, you know, pound Kiwi, probably going to, I'm going to focus a little bit more on Kiwi CAD. And I don't mind, you know, this setup against that peak, to be honest. Just looking at the trade. So I think we'll look at this little choppiness. I think it's short right here at 79.83 is good. I mean, I'm going to short it here and just put in a stop just above that. So we'll short it right here. And for me, I've got the stop just above the peak. And let's see if we can make a few pips here. Now, if we're wrong, it's going to go hit that stop loss in a hurry, like within the next minute or two, probably. But I'm not risking much in this at all. You can see that peak right there is at 79.92. I just have my stop loss at 79.96. So I put it a little higher than where I marked, 79.96 on my stop. And I shorted it at 79.83, so a little worse price than where it's at right now. That's only 13 pips. I mean, I'm just not risking much here at all. Now, we may hit that stop right here, right now, as you can kind of see the Kiwi strengthening back up. But we'll see. I like that setup. The knee-jerk reaction was down. Sometimes you'll get choppiness. It's not a big momentum. You know, there wasn't a big energy surge. So this isn't a great meeting in terms of kind of the big spike, you know, the big, sometimes you'll almost see the asset gap. Like the news will come out and all of a sudden it's like, boom, and it's trading down here. It'll be a price gap because there's just such a big reaction to it. But see how it's kind of now having the follow through. So we didn't time our entry perfectly. You know, we could have shorted a little higher here on the choppiness, but that's okay. We're up 2 pips. We didn't trigger our stop. It's probably going to be a little choppy, but it should keep working its way lower. Now let's talk about targets here. You know, we're only risking 13 pips. We don't need to make a ton to make this a worthwhile trade. But I really think, I mean, first stop should be down here to this zone around 79.90, 79.63-ish, you know, somewhere down there, which from shorting it at 79.83 is, you know, 20 pips. Risking 13 to make 20. It's not bad. And remember that this is such a low-priced currency. Every pip is more valuable, right? It's a percentage basis. On a percentage basis, that's a pretty good move. So let's go ahead. You can see the momentum surging. Let's go ahead and take profits on half here at 79.61. I'm going to go ahead and lock in half of my profit. So 79.61. Oh, I got 79.62. 79.62 from 79.83. We could have timed our entry a little better, but we've locked in 21 pips. We were only risking 13. It's not bad, and still have a half position. I'm okay leaving the stop there, actually, in the original spot. If it goes back up and we lose 13 on the other half, we made a couple of pips. It's basically break even. You know, it's not going to be much in the way of profit. I'm going to give it a little bit of space here. I don't really, some traders really like to move down their stops aggressively. I'm not a stop loss exit trader. I don't really like my stops to be the reason that I'm getting out in most cases, because if that happens, I always know I'm giving back some price. You know, if I move my stop here and then it hits that stop, well, it's because it came all the way back up here. I'd prefer to leave it back here, risk a little more, give it more breathing room, and then just move it if I need to. Now, that comes with experience, and sometimes, you know, I have to move it to where that stop loss would have been, but I see that I'm wrong, that it's coming back too hard and too violently. But I'm going to leave my wide stop here. Let's look at this thing big picture. Let's go back to that 4-hour chart, which is where we started. Realistically, where can this thing go here in the short run? So, I mean, if you were to just draw a channel line, somewhat of a channel, and I'll kind of get that channel, if I can get this to cooperate here. Let's bump up that weight. And looking at this channel, I mean, you're probably, even just a test down to there would be about 79.40 or so. There's 79.25, 79.30, 79.45, 79.40, something like that. So another, you know, 30, 25 pips or so, you know, something like that is probably pretty reasonable in terms of expectations. So, you know, that might be where I would take off the other half. We'll see. I think at this point you can just kind of manage it as you see fit. But I would look down there at probably that lower end of the channel and think about taking off the other half down there at the low end of the zone. Yeah, I think this is the trade. If we go back to pound, I mean, that thing, if Kiwi is obviously going down, then this was not, we don't want to play pound Kiwi because this was our currency pair if the Kiwi was going to strengthen, right? And that's just not happening. So we're in the right trade here with Kiwi CAD, and I think down there at, you know, 79.40, 79.45-ish, somewhere down there is probably the profit taker. So good stuff. Yeah, in terms of trading, I mean, if you want to go even further, if you want to go even more big picture, you know, where could this thing go in the grand scheme of things? Well, then it can get kind of crazy in terms of price targets in that, well, we can go a long ways, right? We could obviously go, just looking at this trend, if you break down here on the daily chart, so if you come back to those lows and break, this is a little low base that's been happening here. So, excuse me. So on the daily chart, I mean, you want a more aggressive target. If we just look at the low base, it is 79.50 to 80.50, which is 100 pips. That's the range size, right? Distance between that, the top end and the bottom end of the range. So as you break 79.50, where do we go? 78.50. the size of the base here is probably how far you go there. So if you really, really like this pairing and you want to go, you're willing to just trail the stop and really try to make a bigger return and such, 78.50 is not out of the question in the coming days and next couple of weeks. Now you'd have to stay patient with that, but now you're talking about 78.50 target. We shorted this thing at 79.83, which means, that's 133 pips. And since you only have a half position size, you've got less risk and less reward, less size in that position. So hope that answers your question. But if you're really looking longer term, I think this is probably headed towards 78.50. I would agree with that. So good stuff. Thanks everyone for being here tonight. Hope you enjoyed it. That's it. Well, whoops, another question snuck in there. So let's go look at the terms of this. If we just refresh Forex Factory, no big surprise. They did hike by 50 basis points. And in terms of the statement, you could go look into that and read up on it. But I suspect this is a situation where CAD is selling off because, again, this was priced in. So I'm not super surprised by that. Last meeting was so hawkish that you had to think that, this was kind of a take profit moment, that if you'd been playing the Kiwi to the upside, it's come full circle from the last meeting. And now, even though they're still tightening and they're still hawkish and so on, it's kind of priced in, and this is where traders are kind of taking profits on some of those trades. So I think that's where we're at. All right. Thanks again, everyone. Have a great night. We'll see you next time. Goodbye.